Good afternoon. Welcome to Radiant Logistics, Inc. financial discussion for the first fiscal quarter ended September 30th, 2025. This afternoon, Bon Crane, Radiant Logistics founder and CEO, and Radiant's Chief Financial Officer, Todd Macomber, will provide a general business update and discuss financial results for the company's first fiscal quarter ended September 30th, 2025. Following their comments, we will open the call to questions. This conference is scheduled for 30 minutes. This conference call may include forward-looking statements within the meaning of the Securities Act of 1933 and the Securities Exchange Act of 1934. The company has based these forward-looking statements on its current expectations and projections about future events. These forward-looking statements are subject to known and unknown risks, uncertainties, and assumptions about the company that may cause the company's actual results or achievements to be materially different from the results or achievements expressed or implied by such forward-looking statements. While it is impossible to identify all factors which may cause the company's actual results or achievements to differ materially from those set forth in our forward-looking statements, such factors include those that have in the past and may in the future be identified in the company's SEC filings and other public announcements, which are available on Radiant's website at www.radiantdelivers.com. In addition, past results are not necessarily an indication of future performance. Now I'd like to pass the call over to Radiant's founder and CEO, Bon Crane.
Thank you. Good afternoon, everyone, and thank you for joining in on today's call. Notwithstanding the difficult freight environment, we delivered another quarter of solid financial results, generating $6.8 million in adjusted EBITDA for our fiscal quarter ended September 30, 2025. Excluding the impact of an unusual and one-time $1.3 million bad debt expense related to the First Brands bankruptcy, adjusted EBITDA would have been $8.1 million. And while much of the growth in our transportation revenues from the quarter came through our acquisition efforts, we are seeing interesting organic growth opportunities in connection with our contract logistics, custom services, and emerging technology services offerings. We are early in our journey, but we are particularly excited about the prospects of Navigate, our proprietary global trade management and collaboration platform. Navigate represents a meaningful differentiator for us in the marketplace and supports both domestic and international shipments by aggregating and organizing supply chain data to deliver enhanced visibility, automation, and faster decision-making. With streamlined deployment measured in weeks, not months or years, our customers can quickly reduce costs, optimize routing, and improve buying and routing decisions. We believe that speed to market and ease of deployment represents a clear competitive advantage, and that Navigate will serve as a meaningful catalyst for organic growth as we introduce the technology to our current and prospective customers in coming quarters. As previously discussed, we believe our durable business model, diverse service offering, disciplined approach to capital allocation, and low leverage continues to serve us well. We remain virtually debt-free with net debt of approximately $2 million as of September 30, relative to our $200 million credit facility, and are on track with our continued efforts to deliver profitable growth through a combination of organic and acquisition initiatives, while thoughtfully relevering our balance sheet through a combination of strategic operating partner conversions, synergistic tuck-in acquisitions, and stock buybacks. In this regard, in September, we achieved a significant milestone with our acquisition of Mexico-based WePort. Mexico is an important market for us, and in addition to supporting Radiant's legacy and prospective customers across Mexico. With respect to our stock buyback program, we acquired $0.8 million of our stock through the 3 months ended September 30, 2025, and another $2.8 million of our stock subsequent to the September 30 and through November 7, 2025. Looking ahead, we expect to continue our balanced approach to capital allocation through a combination of agent station conversions, synergistic tuck-in acquisitions, and stock buybacks, while at the same time looking to invest in incremental sales resources with attention given to our deployment of the Navigate technology. With that, I'll turn it over to Todd Maycomber, our CFO, to walk us through our detailed financial results, and then we'll open it up for some Q&A.
Thanks, Bon, and good afternoon, everyone. Today, we will be discussing our financial results, including adjusted net income and adjusted EBITDA for the 3 months ended September 30th, 2025. For the 3 months ended September 30th, 2025, we reported net income attributable to Radiant Logistics of $1,293,000 on $226.7 million of revenues, or 3 cents per basic and fully diluted share. For the 3 months ended September 30th, 2024, we reported net income attributable to Radiant Logistics of $3,376,000 on $203.6 million of revenues, or 7 cents per basic and fully diluted share. This represents a decrease of approximately $2,083,000 of net income over the comparable prior year period, or 61.7%. For adjusted net income, we reported $4,467,000 for the 3 months ended September 30th, 2025, compared to adjusted net income of $7,883,000 for the 3 months ended September 30th, 2024. This represents a decrease of approximately $3,416,000, or approximately 43.3%. For adjusted EBITDA, we reported $6,797,000 for the 3 months ended September 30th, 2025, compared to adjusted EBITDA of $9,452,000 for the 3 months ended September 30th, 2024. This represents a decrease of approximately $2,655,000, or 28.1%. The current quarter largely mirrored trends that we saw in Q4 2025, as we've had persistent headwinds with a challenging freight market. Excluding the $1.3 million bad debt charge related to First Brands, adjusted EBITDA would have been $8.1 million, modestly exceeding the $7.9 million reported in Q4 of 2025. With that, I will turn the call over to our moderator to facilitate any Q&A from our callers.
Certainly. Everyone at this time will be conducting a question and answer session. If you have any questions or comments, please press star 1 on your phone at this time. We do ask that while posing your question, please pick up your handset if you're listening on speakerphone to provide optimum sound quality. Once again, if you have any questions or comments, please press star 1 on your phone. Your first question is coming from Jason Seidl from TD Cowen. Your line is live.
Hey, thank you, operator. Bon and Todd, afternoon, guys.
Good afternoon.
2 quick things. One, more of a longer-term thing. How should we think about Navigate in terms of, how deployed is it currently? How quickly you could get it out to your customer base, and how many customers in total do you think ultimately need to have it? Is it 100%? Is it 75%? And then I have some follow-ups.
Yeah, sure. Thanks, Jason. So, as I kind of alluded to, we are early days with Navigate, and to just kind of level set, I guess, when we acquired the company Navigate, which was formerly known as North Star, it had some really interesting technology inside of it, which we now refer to as Navigate, or in some context, GTM for Global Trade Management. So there is a number of legacy Navigate customers on the technology, but we have been spending the past year and a half or so integrating GTM with our core technology stack, which some on the call might know as SAP. So we've been spending time to basically get those systems connected so we could leverage our 100+ operating locations across the country as effectively virtual sales organizations to get in front of current and prospective customers to introduce the GTM features and functionality. And early on, and as we acquired Navigate, that technology was used almost exclusively in supporting ocean import business. But we have tweaked the technology such that it's now capable of supporting both international and domestic services. And we're in the middle of a fairly significant deployment where the principal focus is actually on the domestic transportation and shipping side, and kind of a holistic vendor management strategy for the entire supplier base. And so we're, this is not a one size fits all. I don't think all of our customers, will need necessarily to access the breadth and depth of this technology, but for those customers that really want to partner and kind of manage their supply chain in this way, I really don't think that there's anybody out there that has this technology. Not only our direct peers, I'm not aware of any of kind of even the big boys. I'm not aware that they have an offering quite like this. And then another thing that I will mention is, one of the common little threads for Radiant that we talk about is trying to work with kind of meeting people wherever they want to be met, right? That extends to our agency stations and whether they want to be agents or convert and become company-owned stores. But it also extends to our customers and how they might choose to interact with us around this technology. So specifically, we are in a position and kind of open for business, if you will, to sell the technology on an unbundled basis and act as, effectively a 4PL managing, getting our customers' freight all under one umbrella, even if we're not necessarily managing all of the freight, or we can, effectively sell the technology on a bundled basis, as part of the individual shipments, that we do manage. So we're intending to be pretty flexible, leverage our footprint and our reach, and get out there and share what we think is a pretty exciting new offering coming to the marketplace. And kind of, alongside that, I expect that we will be making incremental investments in our sales resources to really prime the pump and get out there to try to get some good ramp and acceleration around adoption of the technology as we move forward. And so there's a real emerging, whether you want to call it freight tech or SaaS type solution, but there's, I think that there's a real, and emerging is the right word to use for it, but we're really excited for the prospects and having a real distinguished differentiator in the marketplace to get in front of our customers and prospects with.
No, that makes sense. Now, how many quarters do you think it'll take to have a noticeable impact on the P&L?
I think within the next couple of quarters, we're going to be able to talk about incremental organic growth that we have earned through this differentiated offer. But I think it's going to be a long and exciting journey in terms of onboarding customers. This isn't like we're going to cap out in 18 months and kind of hit peak. I think this is a long, going to be a long and differentiated, offering, and hopefully we can make a lot of hay with it.
Well, I think in future calls it would help if you can put some numbers around the adoption of the technology for us. That definitely be very helpful. Bon, getting back to sort of the near-term macro, obviously it's a difficult freight environment, but, how should we be thinking about the current quarter? So the roll from sort of September to October to November, what are your clients telling you to expect on the peak sort of thing, on the peak side of things, and how should we think about the current quarter?
I think freight is, when you say the current quarter, you mean the upcoming quarter into December, correct?
Yes. Yeah. The one we're in.
Is that what you're asking? Yeah. Yeah. So, I think it's, continues to be a relatively difficult market out there, particularly for the international business and all the vagaries of tariffs and what's coming and going, and, how customers are trying to manage through that. We do seem to be seeing some kind of early signs of improvements and kind of over the road, stock brokerage pricing. Thankfully we don't have a lot of exposure to long-term contracts in the over the road space. So we're hoping to see a little improvement, in terms of the performance of our own brokerage operations. How sustainable that will be, time will tell. But given all of the CDL and other kind of mandates that have been coming out, it's kind of, I think, bringing along the notion that there needs to be some market rationalization on the capacity side of things. And so I think some of those initiatives are helping that along a little bit. So I think we'll see a little improvement there. Some of these ancillary services. So I think, core trans is going to continue to kind of muddle along, but at the same time, as I alluded to in the prepared comments, in the kind of the value added services, whether it's contract logistics and warehousing or kind of incremental opportunities on the customs brokerage side with the elimination of the de minimis rule, or what we're doing on the tech side, is, all of those things are going to help mitigate what, some of these challenges that I think are going to persist into calendar 26.
Okay, that makes sense. On the warehousing side, we've been hearing that some of the warehousing pricing is getting a little bit more challenged as, some of the COVID builds come online. What are you guys seeing out there?
Well, again, as a reminder, most of our warehousing in our current environment is based up in Canada. And Canada has been a real beneficiary with some of the, what I'll call the tariff dynamics, and shippers trying to mitigate or defer, kind of the tariff dynamics. And so there's been a lot of incremental opportunity in Canada and Mexico, for that matter, as shippers are just trying to navigate through the tariffs. So, we remain pretty bullish on the contract logistics opportunities in our kind of adjacent trading partners in Canada and Mexico. And at least today, we don't have much meaningful warehouse exposure in our U.S. operations.
Okay, that's helpful. Well, at TD we love the Canadians, so. Listen, guys, I appreciate your time.
All right, thank you.
Thank you. Your next question is coming from Jeff Kaufman from Vertical Research Partners. Your line is live.
Hi, gentlemen. Good afternoon.
Good afternoon.
Well, Jason, thank you. Well, Jason asked a number of my questions, but I'm going to ask them a little differently. You talked about what's going on in the truck markets. You got the recent airworthiness directive taking some MD-11s out of the international movement space. You got spot rates that are making it a little bit challenging domestically. Where is this making a difference for you, and where is it not really affecting Radiant?
Well, I think it's making a difference in all. We're kind of in the same pond with everybody else navigating these issues. So I don't think we're necessarily insulated or immune from these market challenges that most everybody else is facing. We don't have as much pure retail exposure as maybe some of our competitors would. So, maybe we're a little less exposed there, but, we don't like where ocean rates are or the tariff dynamics any more than most other folks. So I think we're kind of in the soup with everybody else, but maybe just with a little less exposure to the retail side of things, and maybe a little more exposure to the government sector and government spending, which is, I think, a net positive.
Well, I was going to ask about that with the shutdown, which was mostly after the quarter, but was that anything that affected your business, or was the business that you did largely immune to anything that happened?
Well, we're starting to see a little of that, but I think that's going to be very short term in nature, as opposed to kind of more of the macro. But I'm optimistic the government shutdown will resolve itself here, in the coming days, if not weeks. But the resolving the more macro tariffs and demand and capacity and how that continues to resolve itself, I think that's a much longer timeline and story.
All right, and then just to follow up on Navigate, because this is an exciting deployment that you're doing, and I apologize if you feel that you've answered this already, but once this rolls out, it's like 12 months from now, you talked about improved buying, improved routing. What types of things are you going to be able to do that you couldn't do 12 months ago?
I think in particular, well, a couple of things. One is it's now actionable. Remember, a big part of what we've been doing, well, let me back up and make even a more foundational comment. Navigate has been building and refining this technology since the early 80s. So this isn't some, new shiny object that just got created with AI and it's some kind of pie in the sky idea. I mean, this is kind of battle-hardened technology that's been deployed and been used for quite some time, focused almost exclusively on the international side of things. And we've taken that and we've massaged it and got it positioned now to support, it will be a bit of our coming out party, so to speak, because until we got GTM integrated with SAP, we couldn't go sell it to a customer because we weren't actionable. If they said yes, we couldn't really operationalize it within our operating system. But now we can, right? And we've evolved the product to be a more holistic tool supporting both domestic and international. So for somebody who has an appetite or interest or sees value in really leaning in and managing their vendors and kind of managing the transportation spend of the vendors supporting them, we've got a really interesting way for them to get at that. And another kind of aspect of this that we kind of touch on in our press release is, kind of different runs at this solution, have occurred from time to time, but getting the solution actually deployed and vendors trained on the tool and how all of that works, can be a cumbersome and challenging process. And we've kind of cracked the code on ways to get that deployed to broad numbers of suppliers without a lot of pain and brain damage from supplier adoption. And so that's a game changer.
Thank you for the clarification and congratulations.
All right. Thank you.
And thank you. Once again, everyone, if you have any questions or comments, please press star, then 1 on your phone. Your next question is coming from Mark Argentino from Lake Street. Your line is live.
Hey, Vaughn. Hey, Todd. Just a couple quick ones. Just wanted to get any updated thinking around the WePort acquisition that you've had it in-house for a couple months. And then also just want to touch on the First Brand bankruptcy. Looks like you wrote down $1.3 million. Do you think there's an opportunity to claw any of that back at some point? That'd be helpful. Thanks.
Sure. So we're just into the WePort acquisition, but we're really excited to have been able to get that transaction done. Mexico is I think overtaken China as U.S.'s number one trading partner. We have a lot of existing customers as they continue to diversify away from China, either to Southeast Asia or other locations, doing more and more in Mexico. So we wanted to augment our presence in Mexico to support our existing customer base, much less get in a position to support kind of incremental customers with everything going on in Mexico. So, and we've really, been focused on the idea of continuing to build out our own footprint here in North America, emphasize North America. Historically, we've obviously been strong in the U.S. and Canada, but we were, had a modest presence in Mexico itself. So the WePort transaction really solidifies our capabilities across all of North America. For those who've been with us a while know we've been on the border doing cross-border for some time, but we've never had a meaningful, true international air and ocean capability in Mexico that WePort now brings us. On to First Brands, candidly caught us by surprise, and I haven't followed it terribly closely, but, it looks like, that's a real, a lot of people got scorched in a really, really big way in and around First Brands. We're obviously not happy to take, that $1.3 million charge that we encountered. But we're not, we're exploring when and if it would make sense to support them on a post-petition basis in the bankruptcy, but we don't have clarity to that yet to know whether or not, that would make sense or not. It's, the fact that a lot of other people got impacted doesn't make it feel any better, candidly, but at the same time, we're not alone in kind of, how we ended up where we were. And it was, again, I don't want to speak too far out of school on the First Brand situation and the dynamics that got them there. But I think, I don't think anyone appreciated there was a kind of a going concern issue at First Brands until literally the lenders kind of sniffed something out and kind of called everybody to the table. And so it was one of those, it was good until it wasn't, and it all was very quick the way that it unraveled. But to kind of round out that conversation, we're certainly we don't believe this incident is reflective of a broader risk across our portfolio of customers, et cetera. This really was a kind of a one-off unique situation tied to, what appears to have been some unusual activities inside of First Brands.
That's helpful. Thanks, Vaughn.
You bet.
Thank you. Your next question is coming from Mike Vermut from Newland Capital. Your line is live.
Hey, Vaughn. How you doing?
Good.
Great execution in this market here. Question for you. Are there any for Navigate, are there any use cases that you have that you can discuss how you're deploying it? And does it increase the size of the customer target for us? Are these larger customers that we can be targeting now? Is it a broader market that we're looking at? Like, how does it change the TAM for the company?
So a bit of a delicate question. Yeah, we've got some great case studies, but we can't talk about them yet because we don't kind of have quote unquote permission. But for those folks who've been on these calls for a while, you'd be hard pressed to find me talking as bullishly about anything prior to Navigate and what I think it represents as an opportunity set for us. So can I get into, specific names? No, not yet. But, hopefully in time we'll have an opportunity to share some of those things. But to your second question, yes, not to the exclusion of smaller shippers, but I do think this gives us an opportunity to bring new value to larger shippers with complex supply chains who've been trying to kind of solve the riddle in a way that they've struggled, that we can bring kind of a new tool to the table to help them address some of these types of initiatives that I think are really going to bring a lot of value to the customers. And kind of one of the just to kind of give you a sense of one of the dynamics without getting into the who, but just kind of more of the what, is as we onboard customers who are managing their suppliers and bringing their suppliers onto the platform, those suppliers themselves in turn are getting exposure to the tool and create yet incremental opportunities from the suppliers who are trying to solve some of those same or similar issues from their own perspective. And so we're really hopeful that this is going to, really light up in a way that just is not a way that we've ever had an opportunity to think or talk about, the pipeline or the opportunity set or our go-to-market strategy. It's just a different, a different framework, right? That we're going to get to test out.
Excellent. And then into my next question. So, when you go, it's really incredible when you look at what you've done to this company over the past 10 years, right? The acquisitions, the value accreted, the balance sheet strength, the debt pay down, the cash generation, all of that, right? It's a different company than we were 10 years ago. It could be one of the biggest changes in the company in our space that I've seen. And yet the valuation on the company is the same, if not less, because we've repurchased shares along the way.
Oh, I was going to tease you for not mentioning the stock buybacks, but yes, and when we've been buying back our stock.
Yeah, we
right. Our valuation is our valuation is lower than it was 10 years ago, and the value created is significant along that way.
Yes.
Is that? And I kind of feel like you've realized that here, and so our buyback has accelerated at these levels, knowing what Navigate may take, that we're at the bottom of a cycle here. Should we assume that if we do stay here, you will utilize that buyback maybe even larger than it has been in the past?
Yeah, well, we never want to commit to magnitudes, and we do value our financial flexibility, but at the same time, the short version is we expect to continue to be active in our stock buybacks, at these types of price points. We think it's a great use of capital, and so we'll continue to be there, on where we think there's kind of obvious value, and so we look at a lot of deals, and I can tell you I'm not aware of any other company on the planet of our size that you can buy at our implied multiple.
Right. I think, look, there's no question that we are, at a spot where, buyback, and I actually haven't seen the future and, heard it in your voice, what the potential is out there. So yeah, I'm saying buying back stock here with our balance sheet, there's not much out there like we are. So congrats, guys.
Thank you. Thank you.
Thanks, Bon.
Thank you. That concludes our Q&A session. I'll now hand the conference back to Bon Crane for closing remarks. Please go ahead.
Thank you. Let me close by saying that we remain optimistic about our prospects and opportunities to continue to leverage our best-in-class technology, robust North American footprint, and extensive global network of service partners to continue to build on the great platform we've created here at Radiant. At the same time, we intend to thoughtfully relever our balance sheet and through a combination of agent station conversions, synergistic tuck-in acquisitions, and stock buybacks. Through our multi-pronged approach, we believe we will continue to create meaningful value for our shareholders, operating partners, and the end customers that we serve. Thanks for your listening and your support of Radiant Logistics.
Thank you. Everyone, this concludes today's event. You may disconnect at this time and have a wonderful day. Thank you for your participation.